Hey everybody, Chuck Barone. It is Friday, October the 6th, 2023. Let's wrap up a week of crazy... There's no rhyme or reason to these markets anymore, guys. They're just bananas. I'm trying to figure this out today. Anyway, we'll talk about it during the show here, but before I get rolling, let me welcome everybody to the show. And as always, thank you guys for your support, man. You guys keep coming back. We're going to keep making these shows for you guys. We really appreciate it. All right, so let's take a second and talk about the markets today. Okay, so we know the big data today was going to be this non-farm payroll report. And we got that first thing this morning. And the numbers, depending on how you look at things, were pretty astounding. Analysts being way off. Not a great number for the Fed, I don't believe. But the stock market acting like it was just the greatest thing that ever happened, right? So the stock market really bounces here. The Dow jumps 288 points, 33,407 on the Dow. The NASDAQ up 211 points, now at 13,431. And the S&P, the broader market, goes up 50 points, 4,308. So the whole market's celebrating these numbers. Well, jobs came in super powerful strong, guys. And the last 2 months were revised higher. So the job market's still super strong, and we're going to talk about that in detail. In my mind, well, there were, of course, you know, they want, because that top line news is disappointing, they want to parse this out now. And it's like, well, you know, wage growth was only up this much and kind of wasn't as much as it has been. And blah. Wages still going up, guys. Okay? Certainly faster than businesses want them to. But the jobs number tells us this market's still red hot, man. So the Fed right now failing. If I'm a trader in this market today, I guess if you're looking for a reason to be bullish, you can always find one, but I wouldn't be feeling that way today. And you guys know that I'm not this perpetual bear, right? I'm not a doomsayer. I'm not a, oh my God, the sky is falling guy. But this doesn't make sense, this rally into today's news. The bond market reacted like I thought it would. Prices falling, yields rising. The 10-year goes up 6 basis points, sitting at 4.78%. And the 2-year jumps 6 basis points, sitting at 5.08%. So there's really not much movement in the bond market today, but actually moved the way I thought it would. The spread between the 2 and 10, still only 30 basis points, very narrow. The inversion, I should say. So the bond market in deep, deep, deep trouble, guys. From 10-year to 30-year, those bonds are just annihilated. I was reading an article today that says the worst bond bear market ever. Even worse than like Great Depression stuff, even worse than like the 70s and 80s with the big inflation then. Crazy, crazy, crazy stuff going on. And the world, you know, just seems like everybody's oblivious to all of this stuff. And everybody just wants to paint a rosy picture on it all, like, well, you know, it's all going to work out just fine. Everything's going to be perfect. Well, I have a hard time believing that. The dollar today was down small. Still up over 106, 106.10. The dollar's still strong. Looked like it was going to surge up toward maybe over 107. Maybe was for a second there, but not long. Now coming back down a little bit. Still super strong, but the dollar coming down a little bit gives a little bit of relief to gold and silver today, so they kind of finally catch a little bit of a bounce, man. They've been getting beat up pretty bad. Gold jumps $12.90 an ounce, sitting at $1,833.10. Silver up 64 cents, up at $21.59 for an ounce of silver. So metals have a little bit of a rally today, a little bit of relief, because it was starting to really feel like things were turning bearish there. With gold and silver. You know, strong dollar and these higher rates, not super great for gold and silver, but nonetheless, they're holding their own as far as prices go. They're down from where they were peaking, but not for long, guys. Oil today has a little bit of a bounce as well. It's been tanking pretty hard. Today bouncing up 48 cents per barrel, so not a giant move, just a small bump. Sitting at $82.79 per barrel for West Texas Intermediate. It's kind of amazing. Just think about a week ago I was tripping, thinking I was going to have to redo kind of the way I thought about oil. We really kind of were, maybe the market certainly was convinced that $100 a barrel oil was coming. I kind of go by what I see at the gas pump, which is brutal, but today price is down. Last week I paid $5.69, today $5.14. So still high, but not as bad as it was. But oil bouncing today, so a little bit of a bounce from oil bulls. But the price, I still would say, depending on, they have this idea of demand, right? And apparently this idea of demand is pretty fluid, because the idea of, well, maybe there's going to be more demand than we thought, made oil spike. And now they go, well, hold on a minute, maybe it's not going to be as much as we thought. And now the price comes right back down. It's crazy. Bitcoin today rallies up $476, 27,974. Looks like Bitcoin going to maybe make a run at 30,000 again. It's been holding price pretty strong. Got to give Bitcoin credit where it's due. There hasn't been a lot of great news in the market, but Bitcoin holding on. So what a wild, weird day today, guys. But just remember this whole wage growth slowdown and laugh about it like I did today. So we knew the news of the day was coming. I'm still waiting for consumer credit. I got to catch that one. I haven't seen that report yet. But the big news today was simple. Non-farms payroll report. So jobs, guys. 336,000 new jobs last month. Analysts expecting 170,000 was the consensus. Man, this puts big pressure on Powell and the Federal Reserve, man. Their plan with the way they've been raising rates, pretty simple one. They want to slow the economy down. They want to slow down hiring and wage growth. They want to slow things down, spending even a little bit. Not so much to cause a recession, but to kind of tamp down demand a little bit and try to bring prices, if not bring prices down, at least have the price increases slow down, right? Big problem though, the economy here refuses to cooperate. I was telling you guys, man, there's no wow, everything's going to go our way all the time. It's just crazy. But they're kind of believing that was the way it was going to go. Now this, I've been telling you guys, this bump in the road or this glitch or whatever the word is, I was telling you this perfect landing they're going to engineer is bullshit. And here's the first bump. Big one though. Big. Because this is what they've been talking about. They've been expecting these numbers to come down. Guess what? Not even close. Now this number foreshadows some stuff for us, right? The first thing it foreshadows is we can kind of expect the inflation numbers to kind of stay high. A lot higher than the 2% target, that's for sure. Wage growth, even though it was less than last month, still pretty robust, man. And with all these hot jobs, what happens is that just tells us there's competition for labor out there. When that competition, as it heats up, always brings wages up with it, right? So that's one thing we can certainly look at. The second thing is that the Fed is probably going to be forced to raise rates again this year, like I've been telling you guys they were going to. I'm surprised, honestly, they didn't raise them last month. I really thought for sure they would. Try to think logically, I guess, and that doesn't really work with the way government thinks, I guess. But I kind of figured if they know they're going to raise rates again this year, why wait till November? Do it now in September and let the market digest it. Well, they didn't. But now it looks like, this may kind of force their hand, especially if all the rest of the numbers come in tight, high, and hot like this one did. Now, analysts are wrong. They're often wrong. They make mistakes and they get things wrong, and that's to be expected. We're human beings, after all. But rarely are they wrong, like to this degree, where they're guessing 170,000 Okay, so maybe a big miss would be 250,000, but not 350. So that, I'm sure they're shocked right now, right? I tell you, man, analysts, they're hiding their faces in shame today, guys, right? Now, when I was reading this morning, before the number actually came out, they were showing Citi had the highest estimate. Citi was estimating 250,000 jobs. I think B of A was the lowest at around 100. I think they were guessing 150,000 jobs, so they were actually under the consensus. Everybody else was kind of in between there. Big miss, guys, right? So now, this really puts the Fed in a really tough spot. Right now, guys, this bond market, every day the situation keeps getting worse, man. People are losing money. I mean, most people don't think of big losses in the bond market. But let me tell you guys, listen to this here. The bond market is having the biggest collapse it's ever had in its history. Losses on longer-term bonds. Bonds 10 years to 30 years. Bonds over 10 years in maturity now this is going back to 2020, so bonds in existence from 2020 and before, minus 46% in value. Minus 46%. 30-year bonds, 2020 or older, down 53%. Can you imagine being a bond buyer, a fixed income person? You buy 50 grand worth of bonds, and now that 50 grand worth of bonds is worth, less than 25 grand? What the hell? That just does not happen in the bond market. Losses in this bear market, in this bond market right now, are already double the historic bond collapse back in 81. And we remember that one because the collapse was so bad that bond rates got pushed to, 16%. 16% on the long bond. Now this is all happening, this sell-off in the bond market is all happening at the same time that the Treasury's in there borrowing money like there's no tomorrow. $1 trillion. So as the older bonds are cratering, older Treasuries are cratering in value, the Treasury is pushing out Brazilians of dollars worth of new Treasuries. I don't know how that ends well, guys. I just don't know how it ends well. They're borrowing at an unprecedented rate. I've been telling you guys this perfect lending is bullshit, and I knew this was coming. So now what does the Fed do? You're Powell. You're looking at a bond market. You need this bond market to be positive. You need this bond market to be thriving because the federal government's in there selling bonds like crazy. So you don't want this bond market to completely zero out, man. Right? And it's on its way. So now you're Powell, what do? You're looking at this jobs numbers today. You're seeing inflation numbers going the wrong way. Do you keep rates high and maybe raise again? Or do you have a little sympathy and look at this bond market and try to do something to bail these poor people out? Imagine the sovereign governments that have been buying our debt all these years sitting on these catastrophic losses. Now, granted, if they hold these bonds to maturity, they're going to be made whole. And most of them, I'm guessing with losses this size, whoever's holding a loss that size will hold that bond to maturity no matter how much time there is between now and maturity. But this is disaster, man. The bond market's just cratering, and it's kind of a very quiet collapse because it's not as noisy as the stock market. But no, guys, trillions of dollars are being lost. Anyway, that's it for the week. That's it for today. You guys go now. Forget all the negative. Sorry. Go have a great weekend, man. Spend some time with your friends and family. Enjoy your time. Get away from these markets and the government and work and all the stuff that makes life not as much fun. And do the things that are important, man. Rest. Eat well. Enjoy your time. Don't forget to root for the Bills. 6:30 a.m. Pacific time on Sunday. We got the Jaguars this week. We're going to win. Go Bills. And we'll see you guys next Monday. Thanks.